Good morning, morning. Let's see. Where's everybody? Three people. Ox, good morning. Jones, LJ, Cars, good morning. Let me share my screen. All right. Hope you guys are okay. You guys doing fine. Good morning, Stu, Peter, Justin. I see here. Good to have you guys. All right. Like I said yesterday or posted yesterday. Yeah, good start to the week. Good start to the week. I'll be sharing more setups, analysis. Well, not maybe more setups, but I will share some more analysis going forward. I mean, basically, we're always leveling up in here. But I thought to myself that I do think that explaining the way trading psychology works is also good if I show you guys live why I do or do not trade something, or how do I look for setups, etc. So I think that's a good way forward, right? You guys can see me, right? Normally I do my cam on. Let's see where it is. There it is. Give me a sec. Need to check. Morning B, morning Stu. Good to see you guys. Morning Oscar. Let's see. Open. All right. Yeah. So okay, locked in. My youngest daughter is off school this week, so I can be disturbed potentially, but well, that's okay. So what I want to do today is just take you, like I said, I do want to share more of my trading with you guys over the coming weeks. See if that is good and nice for you guys to follow. I'm recording every session. We'll upload to my YouTube, so you guys can look back if you want. And firstly, I just want to explain how I trade the way I trade. What you should and shouldn't do if you want to follow me. Yeah, and like I said, first I will keep this live stream only. So I'll try to be live in well, when I trade. Just for your information, at the moment I was looking for an entry that I now see just missed, as it's already at my potential TP1. So this means I'll cancel the trade. And as you can see, my entry was 19,160 on Doge, and well, we only went back up to 19,145, which is a miss by just a small amount. So if we hit TP, which is not yet, then I'll cancel the trade, just show you. But I'm going to explain, well, maybe I can explain basically on this why I had this setup here at in this way. Yeah, I did mention it. I'm recording it, so yeah, I do, Kaz. I do. I'll try to upload and record every session going forward, because I do think every session has a lot of value. So I'll put them on my YouTube channel, which I haven't ever used before. Well, I think the only video you'll find on there is how to have your risk in check with the calculator. I think that one is on there. But first, before I'll show you charts, I'll tell you, like Justin already said, I trade a 3-bar reversal. That's my entry model. So let me explain the 3-bar reversal first. I think that is because that's the core of my system. I have a picture here. Give me, what am I doing, guys? All right. Here it is, 3-bar reversal. I'll show you. So this is basically Now I tweak it here and there, but I'll tell you and show you on the charts. But basically what I do trade is a 3-bar reversal. So either a bullish pattern or a bearish pattern. So bearish means I'm going short, bullish means long. This is only the entry model I use. But just for explanation, 3-bar reversal means the A plus 3-bar reversal is 2 bearish candles and then a third bullish candle closing above the high. So what you want to see is a candle forming bearish. Then you want to see a second candle that has a lower high and a lower low in regards to the first candle. And then you want to see a third candle that makes a higher low, but also a higher high and closes above the high of the first candle. So even when it wicks, you want to see, personally, I want to see a close above the wick of the first candle. That's for a bullish pattern. For a bearish pattern, it's the other way around. You want to see the second candle in regards to the first candle making a higher high and a higher low, as you can see here. And then you want the third candle to form a lower high and a lower low. And the close of the third candle needs to be below the wick or the low, so the absolute low of the first candle. So this is a close below. Sometimes you'll see people trade 3-bar reversal patterns with also closes just below the wick, as long as it closes above the body. Personally, I only trade it if it closes fully below or fully above the first candle. Now, to see that live, like I said, okay, so for now we hit TP, so I'm canceling this trade. Give me a second to cancel it, as it's still a limit which is still open. Canceling it now. This is also, I do think, if we talk about chasing trades, if we talk about, I trade mainly on the 15 minutes. I'll come into that. But basically, you can see 3-bar reversals on any time frame. But personally, I only trade 15-minute time frame. I will explain you later. But as you can see here, this could easily be, how do you say it? Something to chase, right? Seeing that your wick comes up to almost your entry and then just misses it. So these are kind of setups that maybe, especially if it's on lower time frame, you say, okay, yeah, maybe I should, because we do have the impulse move down. Maybe I should chase it. No, I never chase. It just, if my limit hits, it hits. If my TP hits before my limit hits, I cancel my trade. So in this case, this trade is canceled. But I'll talk you through why I took this trade. So basically, I trade 15 minutes time frame. I trade the 3-bar reversal and not the only, but the main, how do you say it? The main indicators I use are the 50 EMA and the 200 EMA on the 1 hour and on the 15 minutes. If price moves below the 50 EMA and the 200 EMA, like you see here, I'm bearish and I'll look for shorts. If price moves above the 50 EMA and the 200 EMA, I'll look for longs. If price is in between the EMAs, which you will always also see sometimes, like here, and there forms and there is a 3-bar reversal forming, I might take the trade if I like it, but I'll take half risk because it's in between the EMAs. Unless the RR from one EMA to another EMA is big enough, then I'll probably take just one risk, 1R. 1R, 0.5 R for me is always 1%. So my standard risk is 1% when I don't have the A plus setup or the price is not above the 50 and 200 EMA or below the 50 and 200 EMA. I'll take 0.5 R, which is 0.5% of my trading account. Yeah, let's just give you a small replay on why I took this trade. Let's go back to bars. Let's select this bar. So basically, why was I looking for shorts here? I think LLC talked about this distributive pattern, which is like head and shoulders. But as you can see here, price this morning was moving below the 50 and 200 EMAs. If you look at the 1 hour, it was also moving below the 50 EMA, and the 200 EMA was even way higher. So as long as that's not broken, for me, that's bearish bias. And why is it select bar? Select this one. So as this was when I opened the charts this morning, I was looking, okay, let's see if we can see some sort of 3-bar reversal. Now first we had this big move up, just closing above the 50 EMA, and then we had the sideways movement where we swept the 200 EMA here and made like the right shoulder. So now we was just waiting for either a breakdown or a 3-bar reversal to the upside. That could have been a 0.5 hour. So what you see happening here is that first we do get up, but eventually we take this out down, and we have a 3-bar reversal forming here, breaking below. As again, my bias was bearish, so looking for shorts. Well, eventually that's the moment that I put on my limit here. And as you can see, well, like I said before, we didn't touch it. Morning, mongy cunt. This is not good. I'm not sure YouTube lets me upload those kind of words. Nah, never mind. Good to see you here, man. Good to see you. But thank you, man. Thank you. That's good to hear. But I will show you. I written down a couple trades I took last week to show you them without any drawings, which makes it easier. So remember, I trade 3-bar reversal. I trade bullish longs. I'm looking for longs when price trades above the 50 and 200 EMA. I'll only look for long shorts if price is below or in between, but then I'll only take half risk. I only trade the 15 minutes. I'll look at the 1 hour for confirmation. Okay, now let's go to what did I write down? Last Monday I did a dot trade. Let's go back to. If you guys do have questions, please just pop them in the chat, or if it's something that, I mean, for me this is like simple. I can imagine that for some of you it might not, so then please answer those questions. Dot in the afternoon session, so let's look at it at 2 o'clock. All right, it was moving higher last week, I think. Where were we? There we are. All right, so this was me coming into the session. Touch and beat, as I don't even really know what it is. Yeah, that's a good question. Let me tell you something about EMAs. What EMA is the exponential moving average, which basically just means it's the average of the candles until then. 50 EMA means that's the average price of the 50 candles prior to the moment we're looking at the charts. So it's historical data, so it's lagging a little bit. Then we have the 200 EMAs, which consists of the 200 last candles, the average price of those candles. You have an exponential moving average and you have a simple moving average. SMA, some people just use moving average, which are simple, which means that each average price, or each price of each bar is weighted the same. So that's just 200 bars divided by 200. The exponential moving average is the latest bars weigh more for the average. So if you, how do you say it? If you look at a EMA or you look at a simple moving average, they differ a little bit because the how do you say it? The latest bars weigh more in the equation of the average price. So that's why I find EMA more reliable, because it shows you a better, it takes into account the last, like maybe the last 15 candles do weigh heavier on that average price. Plus, I just like them. So basically what they say is that over this period of time, so over the last 200 candles, the average price was the 200 EMA. Over the last 50 candles, the average price was the 50 EMA. And I like them because a lot of times they are acting as support and resistance. So that's why I trade the EMAs. And again, so I'll take you to my thought process. For me, it's just below EMAs. So I'll use 1 hour and I'll look at it, and you see here, we just fell through the 50 EMA, and on the 15 minutes, we're below. I don't do, how do you say it? That's basically all what I say here is all I use. So no, it doesn't have to be at a previous day array or on anything. It's just the EMAs that I use for my bias. I do like and I'll show you for take profits. I'll do like the golden pocket to see if we actually are in a golden pocket area to short. So I'll look for confluences, but basically I just trade the EMAs off the EMAs and the 3-bar reversal. So let's see how this played out or panned out. It's annoying that it shows this replay in the middle of the screen since a short while. Anyways, so this was my Monday morning session. So I came into session watching the chart. I found this dot and I liked it because, well, usually what I do, I go through all my charts and then I set alerts just below my interest area, which is just below the 50 EMA and the 200 EMA in this case. Now let's see what happens. So this was oh no, it was the afternoon session. Sorry, my bad, it was the afternoon session. So let's see how this evolves. So basically what I do every 15 minutes, I look at the charts and then I see, okay, how did this bar close, and is there a potential, are there already 2 bars forming of a 3-bar reversal? No, in this case, there was not. And I'll just wait and then I go do my stuff and then come back to my charts every 15 minutes on the bar close. See, okay, what's going on? Well, nothing is going on. We had them move down. Now we're moving a little bit up, coming close onto the 50 and the 200 EMA. Now here we have the first sweep of the 50 and the 200 EMAs, right? So at this point, I would draw out a rectangle, giving me the area where price needs to close below on the next candle to short. So if we close below here on the next candle, I take a short. So usually I just already draw my short position in with my entry is always at the low of the first candle on a short, and my stop loss is most of it is on the high of the second candle, unless there is like another wick higher in the vicinity. So in this case there is not. So basically this was my first entry, and then I'll zoom out a little bit and I'll look at a low for take profit, which is a 3.2 in total, and then I'll probably take profit sooner. But let's see first if it did fill, because I thought this one didn't fill immediately. Now you see, now we have a second candle which closed above here, didn't close below, so there is no 3-bar reversal anymore. So okay, then I'll delete this and I will wait for more. And here again, mainly what we see here is just sideways movement. Buyers or sellers trying to step in, buyers stepping back, etc. So it's just hovering around at 50 EMA and the 200 EMAs. Now eventually here we have again the first 2 bars. I'll zoom in. These are the first 2 bars of 3-bar reversal. So we have, in this case, 1 bar, 2 bar with a higher high and a lower high. So this is my area. And then the next bar should close below here. So let's see what happened. There you have your sellers stepping in. So this is the 3-bar reversal, which broke. The 3rd bar closed below the low of the 1st bar, and it never made a higher high. Now, in this case, I shorted it with, of course, the entry at the first bar low. Oh, this is a long position, sorry. So it's a short positioned. Usually the high of the wick is my stop loss, but in this case there are two wicks in the vicinity which go higher. So what I do is I'll put my stop loss at this highest wick. Of course, I then, how do you say it? It makes the trade a little bit less RR, but I'll show you why and what happened on this trade. Why it was good to have this high, but I'll show you in a bit. Now then eventually I'll zoom out and I'll look at areas of interest, and what I'll then see is that we have a fair value gap here, where I'll take my first around the middle. So this would have been my first TP, and then I had a second TP on this low. I never take the wicks as lows for my take profits. I'll try to do the bodies, as sometimes you'll see that wicks don't get totally filled. So in this case I use this is my TP. Now at this moment I wasn't filled, right? This was a 3-bar reversal. So once a 3-bar reversal forms, that's when I put on my limit entry. Again, the limit is always for a short trade is at the low of the first wick, and normally the high of the second wick is my stop loss, but in this case, because we had 2 wicks in the vicinity, I took the highest wick as my stop loss. Now then I have my first TP, my first TP in the fair value gap and my second TP on the low. In this case, this so had only 2 take profits, which then basically I would take 50% of it first. Let's see how this plays out. So the wick after it got filled, so we're now in this trade. As you can see, 3-bar reversal. So it had the retest of that first bar low, wick low, and now we had eventually the seller stepping in at first. Now this is also like when you talk about how do you say it? When you talk about trading psychology, of course, a lot of people because look what's happening here. So it didn't reach my TP. It did make a move down, but immediately took back the move up, and it almost stopped me out here. As you can see here, it wicked above the 200 and 50 MA. If I would have taken the stop loss of the original 3-bar reversal and I didn't take into account these highs, I would have stopped out here. I didn't, and I waited for the bar close, and the bar close was still, that's where my invalidation is. My validation is we closed below the 15200 EMAs, so I'm still bearish. Let's see how it pans out further. Again, we're trying to sweep the 50 EMA, so buyers showing strength but get met with seller pressure, so that's okay as long as they're sellers. Again here, big wick but not stopped out, again not, and eventually there's your seller stepping back in. So basically we made a lower high here. Now this I think eventually went to take profit first. Let's play it out. There it is, your TP1, and as you can see, this fair value gap got got respected. So once I take TP1, I will move my stop loss in this case to break even, which I did, but eventually we went even further down. As you can see, we did get up, but we stayed below the 50 and the 200 EMAs, and finally here was the wick that retested. Now again, if I used the wick low as my take profit, I wouldn't TP'd because it stayed above this wick. Eventually didn't touch it. But that's why I basically use bodies instead of wicks for my take profits, or the yeah, consequent encroachment. I think the 0.5, the zero point 0.5 of the, how do you say it? 0.5 of the fair value gap. That's also the TP I take. Well, eventually, so fully fully TP'd on this trade. So this basically, and maybe it sounds very simple, but I think what I found over the years, I started trading simple, and then made it more complicated for myself. Started to see others, especially, and this was especially in moments where I found out that I had a losing streak. I don't have a high win rate. I do think it's around like 50-60%. So I do take a lot of losses. But the losses are small compared to my wins. And basically, if I look back when I journal, when do I take losses? If I'm not waiting for the best setup, right? Yeah, Yogi, it's all recorded. I only trade crypto at the moment, Justin. So good question. So basically, I have to be patient because I look at the charts in the morning. So when I do these morning sessions, and I look at the charts in the afternoon, and that's my spot for trading. And if there's nothing, then there's nothing. Yeah, I only trade basically London session for me between 8 in the morning and noon. And you guys are I'm hour ahead of you, so that's like 7 to 11 a.m. in the morning for UK time, and I'll trade for me 2 to 5 p.m. Which is 1 p.m. until 4 p.m. for UK time. So yeah, basically that's the London session and the New York session, because I do tend to find that more satisfying, more volume. I just like, for me, I just like crypto more, and it's easier for me to trade with my own money on exchanges. I did trade Forex for a while on funded accounts, but I just like to trade my own money. Yes, there's a lot of money to be made in funded accounts, but for me, it suits me better just trade my own money, and I'd rather than trade crypto. I like the volatility. I like how my system works for crypto. So why would I go looking for elsewhere? Yeah, Bitcoin shits the bed, but still you gotta look at TA. Of course you gotta, but if Bitcoin is at resistance, you gotta take that maybe into account. But I do not do that. I trade a 15-minute time frame. My bias is based on the EMAs. Yes, of course I will zoom out sometimes and say, okay, if Bitcoin is utterly bearish, I won't take longs. But still, I can take longs and win longs and also lose longs. But I can also win a long, even though Bitcoin, sometimes you'll find, and that's what makes the 50 and the 200 EMA so powerful for me, is that you will always find coins that are trading above the EMAs while Bitcoin is trading below. Then you can just ask yourself, okay, am I going to take this long? Yeah, maybe you can't, because for my system it says it's above the 15200 EMA, so it's showing strength against Bitcoin. If everything, if you went to the charts or looked to the charts this morning, let me close this and I'll show you. Yes, I want to exit. So if I go to the charts this morning, so I come in around 8 p.m. So that was around here. You see price trading below or just between the EMAs, but at this point, it's a quick glance to see that most of the coins are trading below 50 EMAs, like this one. So, and this one stands out. I only trade the 15-minute time frame. I start on the 15-minute time frame and I trade on the 15-minute time frame, and the only confluence I use for high time frames is the 1 hour. And as you can see, HBAR, in this case, HBAR, was trading above, or is trading above, the 15 to 200 EMA, so stronger in regards to the rest of the market. Let's look at the 1 hour. It just bounced off the 50 EMA, so it broke above. So yeah, could you be looking for longs? Or, well, what you could say is HBAR is stronger compared to the rest. So let's say if Bitcoin goes up, HBAR might go up quicker. But as you can see, the rest is just a lot of coins are below. Oh yeah, this I drew this morning. Litecoin LTC is very strong compared to Bitcoin, as you can see. So I was looking for this golden pocket to fill. So I had my alert set here. Alert never went off. We had a break of structure again. So we have an uptrend here above the 50 and the 200 EMAs, broken above with lots of volume, lots of strength. So then you can wait for a pullback into your zone, a 3-bar reversal, and then up. But it didn't went as low on this pullback. So yeah, it could go here. I will look for it until noon, and then in the afternoon maybe. But as you can see again, all other coins look to be struggling with their 50 and the 200 EMAs, which is bearish. Some not. Bitcoin is now Bitcoin was at the 50 200 EMAs. I've been trying to use like the seller's zones that LLC posted. So I'm trying to incorporate, see if that works as extra confluence. But as you can see here, Bitcoin is now falling. So it had a good move above and now falling below the 50 and the 200 EMAs. So that could signal more downside, but it could well bounce here and get back above. So basically that's the way I tend to trade, or try to trade. I try to keep it simple. Why do I do that? Also because the more complex it gets, and I know I talked about this a lot, the more complex it gets, the more you start, or the more room there is to doubt yourself if you don't have the right mechanical way of trading. You can have a very complex way of trading, but as long as it's mechanical and following certain rules, and there is no room to doubt yourself, then it's okay. But for me, once I started to make it more complex, my results weren't better. Why? Because I started doubting. I started to see different things. I started to know different things. So, and you get influenced by that. You get influenced by other people. Like I read that yesterday, some people were in a Bitcoin or were in a long trade, and then Sherlock posted a short, and they immediately started to doubt if they were on the right end of the trade. But that shouldn't matter. It shouldn't matter what everybody thinks. What matters is what is your system and how can you follow it relentlessly to the T, every day over and over again. Every trade I take is exactly the same in the way of when do I enter, where do I see it reject, or where do I see it bounce. Exactly, Andrew. And I think he says the strategy search is a horrific roller coaster. It is, but the problem is that people don't stick long enough to one strategy to find out if it works for them. So what they'll do is they'll find a strategy that suits them, their way of trading, and then they'll start on the 1 hour time frame, and it takes too long, so they'll move down to the 15, and then eventually they start to the 5 minutes because you got this urge to trade or to find your setup, and then it goes well a couple of times, and then eventually you get that losing streak because there is no, how do you say, there is no strategy that's 100% win rate, right? So the hardest part comes when you get to that first losing streak, because the market's just ranging. I mean, this strategy works, the strategy I trade works best when we really have good moves up or down. So when it's a ranging market, it tends to work, how do you say it? Doesn't work as good. So what happens in those time frames when you take either a couple of losses or you don't find the right setups, you think, okay, I need to change something about my strategy, and then people start strategy hopping because they don't have the patience to wait or to find out if their strategy definitely has an edge over time. And that's I think the hardest part, being mentally capable of waiting and being mentally capable of not chasing and resisting the urge to find a setup every day. Last week I traded 3 times. I won 2. I lost 1. Happens. It's okay. Just treat 3 trades a week. I know people who take 3 trades in 15 minutes. And I'm not talking about pro traders. I'm talking about people who start to trade and start scalping on the 1 minute because they have this urge to find their setups and to make quick buck. And I think if you will start following me in these sessions that I'm going to do forward, there's no guarantee that we will find a setup every day. There is even no guarantee that we'll find a setup every week, because I can't be online all the time. And sometimes I will find a setup just right before I get on. Sometimes I'll find a setup later on. So yeah, that is also what you can. Or if we talk about what you can and what you cannot expect from me, I just show you how I trade, and I'll show you live how I find a setup that I like, and I'll enter it. And if you feel good, you can enter with me, and then I'll give you exactly the invalidation, the take profits, and I will tell you when to cut the trade. But you gotta understand, we have like 8 different traders, 9 different traders. You gotta also understand that risk part. So yeah, I do think, how do you say it? I do think you gotta understand what you're up to. And again, with following signals, I'd say, okay, just pick 1-2 traders that you like, styles that you like. I mean, if you can't hop on every morning session, that's okay. But hop on whenever you can. I'll do, like I said, 2 morning sessions, 1 afternoon session during New York time, and then I'll do 1 evening session just to give people, a lot of people, the room to jump on. So yeah, in this case, where do you start to look for potential trades? Yeah, I have like my watch list, which consists mainly of higher cap coins, and that's all. I mean, yeah, you can always add a lot of more coins, but I don't think it's necessarily or it's necessary to do so. So where do you look to trade? Look at the Maxi chart. I think on CoinGecko you can look at Maxi, or you can search it up and look at the highest volume perpetual futures. Highest volume means like more volume means more moves. If you trade like a shitcoin that has no volume, the spikes are like high, so you don't want that. You don't want to see a coin with a chart with too many wicks, because that are just a lot of gaps. For example, just for an example, I'll show you Juice Yuck USDT, which obviously doesn't have perpetual futures. I think no, it doesn't. But I'll just show you how a chart looks like that you don't want to trade. Here, Maxi. This is a chart. If you go to even the 1 hour, it shows you a lot of shit like this. There's just absolutely no volume. If a chart looks like this, stay clear. If a chart looks like it has a lot of wicks up and down, you want to see decent candles. You want to see a decent, how do you say it, a decent pattern of candles, and you don't want to see all these gaps. You can't trade this. Because just like one buy can shake up the whole. Crypto J, as you say, Josh. Wick City. You don't want Wick City. You just want to see, you want to see decent volume on candles. So you don't want to see a lot of wicks. You just want to see a chart that looks like this, right? So yeah. So basically, that's a little bit Yeah, it looks like Braille. How do you say that, guys? We say Braille, but yeah. Um, but it looks like that. I understand what you meant. So yeah, basically that's what I do. And I'm really looking forward for you guys to jump on and teach you. Like I said, I think the how do you say it, getting it together with like showing you guys what I look for and talking you through what that does, because I have a head full of thoughts when I trade. I think it really can help you, especially on the trading part, especially on, well, how you well, do or do not trade. Now I did, because I see Keza in here, I did say I'm going to show you guys also how to easily look at your risk when you put on a trade. Yeah, exactly. That definitely helps me. I agree. That was my thought process also. Um, what a shite weather it is, man, guys. It's raining. It's raining, man. Hallelujah. So what I'm going to do is I'm going to show you an easy way to put on, or to show, or to check your risk. I think Keza asked that the other day. Keza, you here? Because I see you online. Yeah. No, Keza's typing, so she's alive. Thank God. Thank God. Yeah. Yeah, but I do think there's I agree, but my in my opinion, Andrew, um, I think for all from all people trying, if you stay persistent and if you put in the works and if you put in um, the grind, you will succeed at some point. And does that point come in 6 months? No, absolutely not. Yeah, thank you. That's the missus putting on the lights, putting me in the spotlight again. Yeah, it's easier. Basically, it's easier, but you gotta know upfront. Okay, what's your 1% risk? So let's say you trade with, thousand capital. 1% is $10, right? So that's your risk. Let me first connect my phone so I can show you. Where is it? Where is it? Yes, do this. Yes, I'm going to close some stuff because else we. Yeah, okay. All right, so here is Maxi. All right, so for example, let's say, yeah, you guys see this, right? You guys can see this. So that Doge trade that I just had, it was like, entry was 19,160. We never got there, unfortunately, but that's okay. Now what you do is you fill in the limit price that you get. So if that could be current market cap, right? Could be current market price, but what you then do is you just fill in current market price. So because I think it's fee wise always better to do a limit entry instead of a market entry. So even if it's called current market cap on, or current market price on the signal, just add the price that it is at the moment, because then usually you get filled. So what you do first is you put in the entry price, and then what you do is just slide the bar to a certain amount. It doesn't really matter at first, because now you're going to see what your risk is. Because what you do next is that in the stop loss here, you have stop loss, you fill in your stop loss. And let's say my stop loss was 0.19326. Immediately, and I think this is new on the Maxi app, you'll see your buy gain and your sell gain. So if I sell here, I have now $30 risk. But what you do then is you press advanced here, and it brings you up to this one. So in this case, I was short. So my stop loss would be for example this, and then it gives me my potential loss here. So if your risk is $10, you should make sure that this tells you minus $10. If your risk is 20, this should tell you 20. So in this case, let's say my risk is $20 and it's 13 here. So what I do then is I close this, and because it means I can put on a little bit more. So I close this and then I move the slider a little bit more up, go to advanced again, go to short again, fill in my stop loss, and now it says 35, so that's too high. So you gotta, like, how do you say it, move this slider the amount that it eventually tells you here, $20 or $10 or whatever your how do you say it, whatever your risk is. This is, I think, the fastest way to check if you are trading with your risk in check. So let's say I take a long from here and I want a risk maximum of $50 again. So I'll put my limit entry in, then I'll put my stop loss here, which should be lower, of course, and then I'll look at, okay, that's $67 of risk, which is not good because I only want 20, so I move the slider down, and I'll look again at advanced, and then I'll tell you again if I put in 1900. I think once you put it in here, it doesn't change, so you gotta put it in here. And you look at advanced and you say, okay, 37. So that way you can just use the slider to eventually see. You will always see what your risk is before you put on a trade. So make sure to check and double check what this says. Yeah, I think that is the way Sol showed us. Once again, I never use contracts, but that could be even easier, yes. But this is, I think, an easy way rather than using the calculator and going through all that to find out what your potential risk is on a trade. Is it, Oscar, that if you use contracts, that each contract always represent the same, how do you say it, the same risk? Gotta look into it myself if that's even easier to use. But yeah, feel free to share whenever you think, okay, that is an easier way to do it. Yeah, that's how it works. So yeah, okay. So every contract always has the same. So basically you always put on the same amount of contracts on each trade. But if you guys want to look into that, Sol shared that, and I think it's still in the YouTube section of the Discord. So you can look at it if you want. All right, guys. Any other last questions or things you wanna, or things that I missed? yeah, you gotta do that. You gotta do that. Share it, Keza. Share it, Keza. People can just look back and take the time to rewatch this, right? To rewatch this. All right. Yeah, it's not, in my opinion, not very complicated. Yeah, but it's in the morning, right? And people just want to follow signals. They don't want to understand. But, well, we'll see. We'll see if this word gets out and if I start to upload more. Hopefully we'll see some more people. I think especially in the evening sessions we'll see, but evenings is when I don't trade. So that's okay, Dabs. That's okay. You can always watch it back. I will upload it a little later. Thank you guys for joining me. Some of you I'll see tonight on the mindset course, and the rest I will see hopefully on the next morning talks, guys. Have a great day and talk to you guys again soon. Ciao, ciao. Bye, bye.